Welcome to the special presentation this week titled Stress Testing the Worry-Free Investment Challenge Winners Third Place. My name is Kathy Onan and I'll be bringing you this presentation. Our contest was a nail-biter, only settled on the last day at the close of the market. An exciting conclusion to what has been a very rewarding contest. Over 92% of our entries made money. It's a wonderful validation of the strength of RS or relative safety. And as Dr. DeLito wrote in his essays, it's also a testament to the creativity and innovative ideas of our subscribers. Beginning this week and for the next 2 weeks, we'll review with you the searches, portfolios, and trading plans of our 3 winners and provide trading templates to make them easy for you to replicate at home. We'll also see if we can't harness some of the good ideas presented that may have finished below the top 3. We'll begin with our third place finisher, ADJ. ADJ first hit the radar on our weekly roundups on May the 26th, when it was noticed for its highest score and has stayed in the hunt ever since. Here are his results. His overall gain-loss was 14.38. with an annualized rate of 57.09, a compounded rate of return of 70.47, a drawdown of 5.24, with an efficiency factor of 94.75. His CalMAR ratio was 13.43, and his overall score, showing the third place, ended at 209.25. One thing that may jump out at you is his overall gain is greater than the overall gain of the second place winner. However, what brought him to the third place position was his drawdown, 5.24 compared to 1.62 on number 2's finish. For your trading, this is kind of a judgment call. However, our portfolio score helped us resolve this issue. Here is the actual contest portfolio that's still running in our VectorVest 7 program. I wanted to give you a feel for the equity curve over the contest period. It struggled a little bit with the softness in June, but continued making new highs to the end. Let's do a quick review of ADJ's original entry into the contest. This is over the period of June 1996 to February of 2016. Its percent winners was a little low at 44.18, but its winners made up for it, still capturing a 13.73% compounded rate of return. Trading activity was a very tolerable under 5 trades per month. Max drawdown, however, was an elevated 40.59%. This was the pullback in the GFC of 2008. Showing this large drawdown. It also struggled in the second half of 2011. The trading rules were straightforward. The recommendations sell on the confirmed calls. Let's look at the search. Here in the search, we had our default sort of RS descending. Here are our parameters, and the key one to notice is GRT, the stock's earnings growth rate greater than or equal to 20. The stock opening price was trending higher for 5 weeks. So the price at the open of the last 5 Fridays has been higher. Here's a graph with each of these indicating the end of the week, which is the Friday, unless there's a holiday, seeing that the open was higher for 5 consecutive weeks. I've run the search as of current time. I'll close the settings and also the parameters to see the list of stocks that have returned. We're looking for stocks that have higher growth rate, that are higher in 5-week rising price trends. I noticed that with my RS sort, some really good RV scores, relative value, looking for price appreciation potential. But the RS scores fall pretty quickly. This would explain why we have faster price movements, and because we hold through the down calls until a sell recommendation, this gives us the deeper drawdowns. Of course, in the worry-free world, we're all about defensive measures. To tweak this search, you might consider lowering the growth rate or setting a minimum relative safety value to stay in the prudent category versus aggressive. Overall, this is a very solid search and trading plan that performed admirably over one period of time. But what if we just got lucky by entering at a favorable market swing? How would you know what performance is reasonable to expect from this strategy? Our solution is to randomize our testing dates. We call it stress testing. It is important to stress test your trading plan, and we considered two different methods of stress testing in using these plans. Sliding window analysis is where we hold a fixed window of time, typically a year, and randomize the entry and exit dates by some fixed interval, often quarterly. The sliding start analysis is where we vary the start date and hold to a common end date. Because worry-free investing is a buy and hold approach, Mr. Shaffer chose to use a sliding start date method to analyze our winners. These high relative safety stocks have lower volatilities and don't make big moves. So we want to give them time to show their consistent performance. Choosing a testbed frame, start from 2010 to current. And here are the results for ADJ. Let's begin with the overall run from 2010 through current. We have our start date, December 31st, 2009, and our end date of 7/29/2016. Our total value ended at almost $204,000. Percent winners, 47.96%. Overall gain loss, 103.91. Commissions, $1,850.70, with an annualized rate of 15.80 and a compounded rate of return at 11.44. Our drawdown, 21.52. Notice we didn't do very well in the beginning of 2010. We were actually underwater. We did recover by the fall. 2011 was rather difficult as we marched from January to January. This is why we thought the sliding start analysis would be more helpful. As we scroll through the test, the equity curve tells the story. Going to run number 2, we march forward 1 year with the same end date, and our equity curve tells the story. Really struggled through 2011, 2012, and finally came back above water in 2013. Our drawdown also increased to 31%, and our compounded rate of return dropped to 6.71. Run number 3, a much better equity curve. We stayed in the green the entire time. Our compounded rate of return jumped to 13.63, and our drawdown was half of the previous run at 15.54. 2012, a good run with a compounded rate of return of 11.91 and 19.49 in drawdown. 2013, not so good. Compounded rate of return of only 5% with a 19% drawdown. 2014, 3.88% with an 18% drawdown. And our last run, 2015, a 70% compounded rate of return with an 8.32% drawdown. So this is the best run, the best equity curve over this short period of time. Using the confirmed call, notice we were flat and out of the market and did not come in until March of 2016. To make this a little easier, here's the table of the results of all the runs. We've identified the best and the worst scores for each data point and averaged all the data points across the bottom. The best ones are indicated in green, so the percentage wins was our last run at 60%. Our best gain-loss was the first run, 103.91. Of course, our commission's much lower on the last run, shorter frame of time. Our annualized rate of return, 62.14 on our last run, compounded rate of return 70.06, and drawdown of 8.32. Our worst runs for each category are indicated with the red. This trading plan has delivered an average annualized rate of return of 18%, sometimes as low as 3.92%, and once as high as 62.14. The average max drawdown has been 19%, as low as 8.32, but as high as 31. Use this data to understand when and how the trading plan works and when it doesn't. Does it need more work for your comfort, or could you ride out those drawdowns? To make it easier for you to make your own studies of our third place winner, we've created a trading system template which includes all the portfolio trading rules as set in the contest portfolio. Here in the program on the back test, click Create a New Back Test or either the New. You'll select from an existing trading system. And if we scroll to the bottom, now we've entered the Worry-Free Investing ADJ using the settings. If we select, this will give you the rules. We're using the search that's in Unisearch for you. The stop criteria is recommendation equals sell. Trying to maintain 10 positions will automatically replace any closed positions as long as we're in that confirmed up scenario. When the confirmed down calls, we'll take no action and let our stops do the work for us. With this template in place, it will be easy for you to adjust your test period to stress test this trading system. Well, thanks for your attention. We'll be back next week with our second place finisher. Until then, if we can be of assistance, please don't hesitate to give us a call.